Welcome, everybody, back to this episode of FinServ Tech Oracles. Here we are, your oracular colleagues, Jerry Murphy and myself, Johna Johnson, to talk part two of the cryptocurrency discussion. Jerry, that was a great conversation that we had last week, right?
Yeah, I mean, to me, it's like you don't pay a little thought to cryptocurrencies. They've been around for a while, but as you start peeling into the details, you really get into this rabbit hole of complexity that is really there that goes off in different directions.
Yeah, no, there's a lot to talk about here. And I think where we stopped last week, and neither of us wanted to stop, was when you were basically making the case that essentially cryptocurrencies are pure speculation, no better than Beanie Babies or tulips, and any sensible conservative investor isn't going to be investing in them. To which my response was, well, yes, but all of Wall Street for the past 40 years has been about investing in stupid things like debt. And essentially, the art of Wall Street, bad debt, like the art of Wall Street has been you want to be the bank that can get in while the bubble is rising and get out before it's bursting. And it doesn't matter what the bubble is. You just, if it's bad debt this week, cryptocurrency that week, etc., it's literally like surfing or skiing. You kind of go, get the momentum and then get out before you crash. And it
Right.
doesn't matter that none of this is really investing in something that makes a product or service or makes any sense whatsoever. So, yeah, go ahead.
And it was funny because at first I'm like, oh, this is something that's wildly speculative. But to your point, a plethora of things have been wildly speculative throughout time, so throughout civilization, whether it's tulip bulbs or
Gold rushes.
wampum or some weird crappy island off the coast of New York at the harbor of Hudson River.
Well, that one was a bet that paid off. But so the thing that I think inspired us to revisit this was you made a point. I think we had possibly even turned the session off. But you made a point that if you want to make money in a gold rush, the main thing to do is hedge your bets. Yeah, you can invest in gold, but you should also invest in pickaxes and blue jeans. And those were your words.
One of the big points I was making is in all these boom bust cycles, there's the people who are prospecting for whatever it is, gold, and
Bitcoins.
some of them make money, most of them don't. But the person who always makes money is the person outfitting the speculators with the pickaxes and the Levi's jeans. And so then I thought, okay, well, who is it that is providing the pickaxes and shovels to this world's cryptocurrency speculators? And you got to say, maybe it's the people that are actually building the data centers and building the compute that is driving the creation of all these cryptocurrencies. And then you think about it, well, there are the investors like the Goldman Sachs of the world that you say, yes, they are investing in cryptocurrencies, but what percentage of the money is invested in the cryptocurrencies versus what they're really investing in is the data centers and the compute, and they're just trying to convince people to invest in the crypto to justify the actual investments in the data centers that are generating all the blockchains.
And that was the interesting thing, because when we looked at, a recent announcement that Goldman Sachs had made about how they were, getting back into crypto, the numbers, this was about a year and a half ago, the numbers were laughably small. It's like Goldman Sachs invests $10 million, it might have been 20, in crypto. And I'm like, 10 million with an M? I mean, I think I could be wrong, but I think Goldman Sachs invests considerably more than that in snacks for the executives in Jersey City. I mean, really. This is it's barely couch change to Goldman Sachs.
You can call Goldman Sachs a lot of things, but stupid is probably not one of them.
Yes. So we were thinking about it, and it was like, well, if you really want to invest in cryptocurrency, the best investment is something that's doubly and triply hedged. And that's, as you said, data centers, compute power, chips, all of that. Because here's the kicker. Whether it's cryptocurrency or AI or quantum, we're getting very close to a what is it, a hockey stick increase in the requirements for computing. People are making noises like AI could consume all available power in the world by 2030, which is not very far away.
It's interesting you say that, because
Yeah,
how many people would have thought you need more computing than was needed for blockchain, and then AI
exactly.
came along?
Exactly. So basically, if you go out and you're investing in, say, power efficient computing chips, that's a damn good bet compared to investing in blockchain because, hey, Bitcoin, if Bitcoin goes up, your investment will go up. If AI goes up, your investment will go up. If quantum goes up, your investment will go up. If all three go down, well, whoopsie, then we've just got organic growth in computing. But that's
Yeah.
still going to carry you some distance. It just won't be going up quite as much as you had hoped it would. So it
Right.
sounds like, Jerry, what you were really saying was don't invest. If you want to invest in crypto, invest just enough to get other people to invest. So do what Goldman Sachs did. Issue a press release about the fact that you're investing in crypto and AI and other compute intensive things, and then go and invest in the compute
Yeah,
infrastructure.
and the infrastructure, because regardless of whether crypto succeeds or not, you're going to have the ability to use or reuse that compute infrastructure for either that or something else in the future.
So I think what we've hit on, and honestly, I would not have believed it until we've had our various discussions over the course of this week, is there is a safe strategy for investing in cryptocurrency, but it's not what you think. It's
Right.
invest in the hardware and the infrastructure, and then throw a little marketing at it so other people will join you in creating the appetite, the consumption of the infrastructure that you're investing in.
Yeah, that sounds like a good plan.
So, Jerry, if you were to tie that up with the strategy that you mentioned last week, you talked about keeping it a limited amount of your portfolio and using your usual risk mitigation strategies. How would you tie that up in a neat bundle for anyone who's listening and wants to plan their crypto investment strategy?
Well, I guess I would say that if you're looking at investing in crypto, it absolutely makes sense. Look at where the risk is, look at where the returns are, and maximize your investment in the things that have the surest returns, and then save room for speculation on the things that are speculative.
And one of the clear areas where we're probably going to see room for return is wise investments in infrastructure.
Exactly.
So
That's rarely going to. It's almost like, when you think about people saying hundreds of years ago, you can't go wrong to invest in real estate. The thing about IT infrastructure is it is kind of the real estate of technology and compute, right? So just like you're always going to need, real estate gets rarer and rarer. I think compute infrastructure is kind of IT's version of real estate, and it's hard to go wrong investing in that long term.
And honestly, Jerry, I think we could talk about this, but IT infrastructure may be the solution to the bigger problem, which is, how do you get humans to consume more and more and more, as they have throughout all of human history by virtue of being, us growing, our population growing. Now that that's actually flattening out, how can you get us to consume more and more and more? And if we can make the transition where it's not us, it's our IT infrastructure that's growing uncontrollably, we can still maintain a reasonable economics based on growth, just not necessarily demographic growth.
Yeah, I think so.
All right. Well, this has been yet another episode of FinServ Tech Oracles. Thank you, Jerry, my oracular colleague.
My pleasure, as
And
always.
and join us again at 9 o'clock on Tuesday mornings, just before the markets open. Thank you.